world didn't know that a quiet change was happening at the highest levels of global finance. While people talked about things like inflation, interest rates, and political unrest, something much more important was going on behind closed doors and over encrypted communications. Two organizations, the International Monetary Fund and the World Bank, have been in charge of global financial policy for many years. They called a series of emergency meetings not to talk about normal money tools, but to plan the structure of a new global financial system. They were not interested in the dollar, the euro, or any other common type of national money. Instead, people who were there say that the main topic of conversation was a single digital asset called XRP and the technology that supports it. Ripple has been pushing this asset for a long time, and central banks have been studying it quietly for years. People who were there or later got internal summaries say that the IMF and World Bank made what they called the final judgment. XRP would be the global bridge asset, the layer of neutral liquidity that helps the world move away from old currencies. They said that this secret choice was made after years of research, pilot programs, cross-border testing, and closed-door meetings with Ripple executives to get advice. Once the conclusion was clear, the models used by institutional economists showed an unbelievable price. It was so high, so transformative, and so mathematically necessary that it sent shockwaves through every private participant in the room. The simulations showed that each XRP should be worth $75,000. This number wasn't based on guesswork, but on how much cash a fully tokenized world economy would need. Ripple first worked with the IMF through public workshops and private advisory groups, which was years ago. Many people thought these talks were just normal fintech research, but now sources say the IMF had been looking into Ripple's technology for a long time before anyone knew. It wasn't just speed or price that interested them, it was also independence. XRP was not tied to any country, ideology, or geopolitical goal like central bank currencies were. It was the first asset that could provide cash flow without controlling money. It was clear to global regulators that as the world became less reliant on a single dominating currency and more multipolar, there would need to be a neutral, widely accepted settlement asset. Over time, the IMF's internal reports stopped looking at digital assets in general and started focused almost entirely on what the XRPL could do. Early models showed that XRP could free up trillions of dollars in idle cash that was stuck in correspondent banking systems. This was the turning point. This kind of freed capital could protect countries from uncertain foreign exchange markets, lessen the effects of global financial shocks, and speed up transactions. The IMF didn't see this as a technology advance. They saw it as something that the system had to do. When it looked into cross-border development financing on its own, the World Bank came to the same findings. Their goal was to find a way to send money right away to places that were in trouble, whether it was because of a natural disaster, an unstable government, or a falling economy. When the world was under a lot of stress, traditional banking methods kept failing, and it would take days or weeks for money to get where it needed to go. But when the World Bank tried different blockchain settlement channels, one network always did better than the others. Even when global financial chaos was simulated, XRP's consensus method allowed for instant finality, high throughput, and almost no cost. What really interested the World Bank, though, was XRP's ability to be used as a value translator everywhere. They found that it could easily link digital fiat, digital currencies issued by central banks, commodities, and private settlement networks. This works in the same way as in a tokenized global economy, where assets, currencies, and responsibilities move at the speed of light. It worked like the settlement genes, keeping the whole system together. As the studies at both institutions went deeper, they saw that they were looking at the same problem from different points of view. The International Monetary Fund looked at XRP as a way to fix the unstable cash between countries and replace the inefficient foreign exchange system. The World Bank saw XRP as the way to make emergency, economic, and humanitarian funding possible. When representatives at a very important joint meeting compared what they had found, they came to a shocking conclusion. XRP was the only asset that could meet the world economy's needs for cash in a modernized world. Soon after, the meetings for the final ruling started. Economists, people who work with central banks, researchers into digital assets, and some Ripple officials were there. They mostly talked about modeling cash, doing economic stress tests, making the system scalable across borders, and creating a single framework for global settlement. The numbers pointed in one way after simulations were run using real world financial flows such as global trade, cross border settlement, derivatives clearing, treasury operations, and the liquidity of sovereign debt. It took an astronomical amount of liquidity for a global bridge asset to support the flow of money between more than 190 countries, soak up the liquidity that used to be handled by trillions of dollars in nostro vostro accounts, and keep the settlement layer for tokenized global assets stable. The value of the settlement assets had to be very high. Analysts did tests with XRP worth $500, $1,000, $5,000, and even $10,000. In all cases below $50,000, the system was pushed because of a lack of cash. The global settlement design only became stable at a value above $75,000, reaching the level of liquidity needed for real-time, frictionless global financial activity. That number was used as a starting point for the secret reports that were sent around among central bank heads. Representatives from Ripple are said not to have been surprised. People who were there said that they had done similar exercises years before. The most interesting thing about the end decision wasn't the value itself, but why it was made. A big part of XRP's future would not rest on small-scale speculation, exchange hype, or market manipulation. The IMF and the World Bank, on the other hand, saw XRP as global public infrastructure, like digital pipes for money. It would be worth something because the world economy needs it to do business, not because of speculative markets. When the economy tokenizes more things, like real estate, bonds, stocks, commodities, and supply lines, XRP needs to be able to handle more settlements. Since XRP has a fixed supply, it needs to be revalued whenever its value goes up. Big national entities knew this right away. For XRP to be the worldwide settlement denominator, its price would have to be high enough to meet the daily needs of people around the world for cash. Movement of demands that often go over tens of trillions of dollars. As word got out about the secret findings, countries started to quietly change how they used technology. Some sped up the development of their digital currencies as central banks, while others started making private payment networks that work with the XRP ledger. Some big governments are said to have bought XRP through backdoors in order to get ready for future integration. At the same time, Ripple grew its global relationships, making it the leader in building the new settlement stack. It was hard to miss, but the orientation was clear. There was one liquidity standard that was being followed by global institutions, national states, and private financial empires. However, small buyers still didn't know that these changes were happening behind the scenes. After the final verdict was given, people who were there said it felt solemn and significant. They knew how important their choice was. By making XRP the neutral backbone of global liquidity, the world would be able to get past the problems caused by the dollar's control, the fragmentation of the euro, and the inefficiency of foreign exchange. The world economy would move from broken analog rails to a unified digital architecture, and at its core would be a digital asset that has been misunderstood, criticized, and undervalued for a long time. Trade flows could settle instantly, capital markets could sync up globally, and financial crises could be lessened through automated liquidity routing. The truth is clear at the end of the story. It wasn't politics or theory that led the IMF and World Bank to their final decision. It was math and the need for it. XRP became the only asset that could play the part in a world where money had to move as quickly as information, settlement had to happen right away, and global liquidity had to stay stable no matter what. And because of that part comes a value that matches its duty. $75,000 per token, a number that comes from how the new financial age is built. Some people around the world don't know this change is coming yet, but XRP will be the basis of the world's new money system once the switch is pulled and the global reset starts. Please keep in mind that I am not a licensed financial planner. The information in these movies is only meant to be entertaining. Before making any financial decisions, I always tell my viewers to do their own study and talk to professionals. Thanks for listening. Do not forget to hit the follow button and give the video a thumbs up if you liked it. Also, make sure the alerts are on so you know right away when I post something new. In the next movie, I can't wait to catch up with you.